if you're a seller, the real question is, what are you going to do? If you have a property that you're thinking of putting on the market, are you going to put it on now with the first rate reduction, hoping that you get crazy buyers? Potentially. But now that we're seeing the potential that we might get 4 rate cuts, should you wait to put your home on the market, especially if you're just selling?
Well, there you have it. We finally got a rate reduction from the Bank of Canada. They've now reduced the policy rate to 4.75%. And some of these news articles that we're already seeing out there may surprise you. My name is Mike Carpino. Thank you so much for watching another video. If you're looking to get some help in the real estate market, you can be like many of the people who reach out to me through our YouTube channel to get some guidance. And if you want that guidance, click the first link in the description box down below. Book a 30-minute client consultation with me and we can figure out if I can help you. And if I can, what the best way to do that will be. Today, what we're going to do is obviously talk about the Bank of Canada's rate announcement that just happened not too long ago here at 9:45 Eastern time. And what we're going to do is look at some of the news articles that are already coming out. There is one out here that will surprise you, and it goes against everything that I mentioned in my live stream earlier today. So it just goes to show you there is a lot of things that can happen in the real estate market, and things can change fairly quickly. If you're a buyer, I'm going to update you on what you should do in this new climate with the rates maybe starting to come down slightly. And if you're a seller, I am also going to update you as we go through this video here. Thank you so much, and let's get into the video. All right, so here we are. Reuters is just come out with this article here, which I think is super interesting. So the Bank of Canada cuts rates. Economists predict another reduction next month. If you were on my live stream this morning talking about the Bank of Canada, I mentioned that I thought it was either June or July. I thought the chances of them doing back-to-back months was extremely slim, but now we're seeing already a prediction from Reuters saying that potentially next month we will see another rate reduction, probably just another quarter point. But if we're on a variable like myself, hey, I'll take all the reductions I can get if it's going to stimulate the real estate market, but also help my pocket at the end of the day. I will take it. Do I think it's a good idea? Not too much, but that's besides the fact. I'm not the one who's doing the policy adjustments here. We're just along for the ride. So let's see what Reuters article here has to say. So the Bank of Canada Wednesday trimmed the policy rate by 25 basis points to 4.75 in a widely expected move that marked its first cut in 4 years. And it says more easing was likely if inflation continued to ease. Great. So if we get more inflation easing, we will see more easing on the interest rate side of things. Economists immediately predicted the Bank of Canada would cut again in July. After keeping interest rates at a more than 2-decade high of 5% for almost a year, the Bank of Canada said that the indicators for underlying inflation looked increasingly positive. With further and more sustained evidence, underlying inflation is easing. Monetary policy no longer needs to be as restrictive. Governor Tiff McCallum said this in his opening remarks after the announcement. The financial markets, however, priced in 35% chance to cut to 4.5% next month. A majority of economists polled Reuters had expected a Wednesday cut. Canadian dollar paired its early gains and weakened by 0.4% to 1.37 to the US dollar, or 72.98 US cents after the decision. There has been a lot of talk that if Canada goes away from the US in these rate reductions where the US holds still, we could see the Canadian dollar dip into the 60s for the first time in a long time, which is kind of scary when it comes to trade. But Canada is heavily reliant on the real estate market, so I understand why they want to make these changes now. The Bank of Canada joins Sweden Riksbank and the Swiss National Bank in bringing down the rates that have burdened households and businesses alike, and muted economic growth amid easing price pressures. The European Central Bank is most likely to follow suit on Thursday. Financial markets foresee inflation in Canada has slowed this year to hit a 3-year low of 2.7% in April. While inflation stayed below 3% for 4 months in a row, it's still higher than the bank's 2% target. Me personally, the 2% target is a pipe dream at this point, so I think 2.7 to 2.5% is actually not a bad spot to be in. Bank of Canada cuts interest rates by 25 basis points. So here is what the chart here looks like. So this is our inflation target. This guy here is our GDP and our CPI, and then we have our interest rates up here. So we've seen interest rates have been flat basically since July. So it's been almost a year since we've seen any movement in these interest rates, and hopefully now this line trends down. Obviously, inflation was extremely high, over that 8% during July of 2022, but now it's getting really close to the target there. We're not too far off, which is great. If inflation continues to ease and our confidence that inflation is headed sustainably to the 2% target continues to increase, it's reasonable to expect further cuts to our policy interest rate, McCallum said in an indication of what future reductions could look like, but we are taking interest rate decisions one meeting at a time. McCallum, who has repeatedly cautioned Canadians that rates will not fall as fast as they rose, said further progress is combating inflation was likely to be uneven and risks remained. We have increasing confidence the Bank of Canada will move again in July. Royce Mendez, head of macro strategy for Desjardins Group, wrote in a note. Andrew Grantham, senior economist at CIBC, also said he expected a cut in July, adding that he foresees a total of 4 reductions this year. So we're in June. We got our first reduction. So they're maybe thinking we see 4 total reductions, so maybe a quarter point each to a point. Wow. The next rate announcement is July 24th, when the bank will also release its latest quarterly forecasts. Economic growth in the first quarter was slower than expected at 1.7%, helping boost market anticipation for a rate cut. McCallum said the economy was operating in excess supply, leaving room for growth even as the overall inflation rate continued to drop. He reiterated that the bank would remain focused on demand and supply mismatch, inflation expectations, wage growth, and corporate pricing behavior. So, what does all of this mean? Is it possible that we get 4 rate cuts this year? Coming in to today, I don't think that was on the table for anybody, myself included. To see 4 rate reductions now would be awesome. I'm in a variable, as we have already talked about. So to see a point reduction would be great. It would help a lot of people who are on the variable rate mortgages. But is this going to set a fire in the Toronto real estate market? It's quite possible that now that we've seen our first rate cut, a lot of buyers are going to get off the fence. They're going to hop into the market and they are going to buy for a short period of time, potentially 30 days, before they figure out if we're actually going to get back-to-back rate cuts. If we get back-to-back rate cuts, everything's going to go nuts in all likelihood, because people are going to think we're going to get a train of rate cuts coming throughout the rest of the year, and that will push our real estate market up. Do we want our real estate to be more expensive than it already is today? No. People can't afford these mortgages as it already is, and potentially it's going to get out of hand. If we only see a 1% rate reduction to about 5%, let's say we get 4 cuts, quarter point each, you're going to put your policy rate at 4%. So your variable rate will be in the mid 5s to 6, give or take. And if that's the case, the prices of homes are going to go up more than we are saving on these rate reductions. So if you're a buyer, just caution yourself. Getting into the market right now is not a bad thing. There's a ton of inventory. We are seeing historical lows in terms of the sales and what's actually moving. So it's a great time to get into the market, but be careful. Now that we've seen our first rate reduction, there's going to be some people who decide they need to just buy, and they might get crazy. So they might get into a bidding war and overpay for a property. Please, 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 please do not let that be you. If you're a buyer, be patient. Know that the inventory is out there and don't overreact. This is great news. I want to see more rate reductions before we start to jump up and down for joy. $50 to $70 a month is not going to move the needle for a lot of people. It might for some grocery bills or maybe your internet, but ultimately it's not a big difference in what you were paying yesterday versus today with the new policy rate change. If we see another quarter and another quarter and another quarter, then we're talking some money that's really going to change people's lives month to month. It might cover your grocery bill. It might not. It depends on where we end up. If you're a seller, the real question is, what are you going to do? If you have a property that you're thinking of putting on the market, are you going to put it on now with the first rate reduction, hoping that you get crazy buyers? Potentially. But now that we're seeing the potential that we might get 4 rate cuts, should you wait to put your home on the market, especially if you're just selling? If you have to buy as well, you have to deal with both sides of the transaction. But if you are just thinking of selling a home, should you wait for the potential of a point reduction or 3/4 point reduction? Or should you try to sell now in hopes that maybe we actually don't get those further reductions throughout the rest of the year? Really, it is ultimately up to you. Generally, June, July, August is a slow market. The announcement that's going to come in July could be very important for you if you're a seller. If you can hold off until that fall market where it always gets a little bit more active once people have their kids back in school, so that September, October range, if you can wait till then, and maybe at that point you're down 0.5, 0.75, you could find yourself getting a significant amount more for your house potentially than the person who is going to put their home on the market today. Or you could have no more rate reductions between now and then, and you can be kicking yourself because there was a blip in the radar where we're going to see a spike here, and I can almost bet on that today. We are going to start to see over the next 30 days sales numbers come up. When I do a month analysis next month for June's numbers, is very likely because buyer sentiment is now going to be a lot better than it was yesterday. Let me know in the comment section down below, do you think this is a 4 rate cut type of scenario, or do you think this is just 1 rate cut and then the Bank of Canada is going to see buyers do crazy things and they are going to pull back their initial thoughts of continuing to lower these rates here to maybe just control these buyers a little bit more and show them that we're not going to see cut after cut after cut. Maybe they make that next cut in September instead of doing it in July. Would love to know your opinion in the comment section. My name is Mike Carpino. Once again, if you need help navigating the real estate market in the Greater Toronto area, out to Waterloo, feel free to click that first link in the description. I'd be happy to help you navigate that with you and your family. Let me know how I can be of assistance to you, because that is what I am here for. Thank you so much for watching this video, and I'll see you in the next one. Bye for now.